Thanks again for tuning into the Captain's Blog. I am David McDonough, President and Founder of Flagship Wealth. Here's your week in review. We're coming off a week, last week with the S&P 500. We've talked about what that is. It's the largest 500 stocks in the United States. Went from 2,700 up to 2,775. Put your calculators away. That's up 2.5% for the week. Double digits for the year, plus 20% since the Christmas Eve massacre. So where do we go from here this week? We predicted consolidation, profit taking. So far, we're wrong. The market makes you look foolish if you try to market time. As of this taping this morning on Friday, the market will be up for the week. Listen, the numbers are good, but they're not great. The global economy is slowing down. We have news coming out next week about trade, impeachment. There is going to be profit taking. Now, we know that there's frustration in portfolios. Dave, why do we have all of our money invested in the equity market? It's up double digits. Why do we have funds invested in the bond market? Well, we believe at Flagship Wealth in asset allocation. And there'll be something in your portfolio working this week that doesn't work next week, but that bond position will work and protect you on the downside. It also leaves money to reallocate when a market, again, that's up double digits in 6 trading weeks, sells off in this profit taking. So asset allocation is utterly important, especially in a market up double digits. And now we'll preview next week. The debate's going to continue, folks. Is it a recession that's coming, or is it just slowing of growth? We're going to have the Mueller report. Was there collusion with the Trump campaign and the Russians, impeachment talk, investigations? At the end of next week, which I think is the most important, is March 1st. Did the tariffs jump on Chinese imports from 10% to 25%? That would bury the stock market. Well, this host is here to tell you that it's not going to happen. There's no way that this president will allow a market to sell off as the Mueller report is being reported. So there will be some type of a deal and announcement as trade goes moving forward. And now we have the question of the week. Over to David Cullinane, the best CMO, Chief Marketing Officer out there.
I'm certainly not paid like a CMO. All right, you ready for the question?
I am.
All right. With AT&T's stock now near 7% yield, can you afford not to buy it? You get questions about AT&T all the time.
Whether it's AT&T, Verizon, any type of a dividend-producing stock. I've been in the business 25 years. I know that's a surprise to some. I'm only in my 30s. But we get the question all the time. Dave, shouldn't I take my safe money, my CD money, and put it into a stock that'll always be around and it pays me a 5% dividend? Well, I ask you to pay attention to Heinz today, David. Heinz, anticipation, mac and cheese. The video does add a little weight, but the mac and cheese and the kids' mac and cheese do too. The stock is down 20% today. It used to pay you a 5% dividend yesterday. That's wiped out, and the value of your stock is down 20% too. Leave the stock picking to professionals. Stay away from individual selections, especially with your short-term money. Thank you again for tuning into the Captain's Blog. I have a special happy birthday out there to a big Flagship Wealth supporter and a supporter of mine for a lot of years. Hey, Pat Miller, happy birthday to you from me and all of Flagship Nation.
Happy birthday, dear friend. We sing to you.
Have a great weekend, and we'll see you next week on the Captain's Blog.